Ladies and gentlemen, good day and welcome to Aptus Value Housing Q4 FY24 earnings conference call, hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Mona Khetan from Dolat Capital. Thank you, and over to you, ma'am.
Thank you, Manav. Good evening, everyone, and welcome to the earnings call of Aptus Value Housing to discuss its Q4 and FY24 performance. We have with us the senior management from Aptus to share industry and business updates. I would now like to hand over the call to Mr. Anandan, Executive Chairman, Aptus, for his opening comments, after which we can open the floor for Q&A. Over to you, sir.
Yeah, thank you, Mona. Ladies and gentlemen, good afternoon. I am Anandan, Executive Chairman of the company. I welcome you all to the conference call to discuss the company performance for the fourth quarter and for the year ended March 24. I have with me Mr. P. Balaji, Managing Director, Mr. C.T. Manoharan, CBO, Chief Business Officer, and Mr. John Vijayan, CFO. The financial results and the investor presentations are already available on the websites of the stock exchange as well as our company. I hope you had a chance to look at it. As all of you know, affordable housing finance as an industry has a good runway for growth, considering the low mortgage penetration, more particularly in Tier 3, Tier 4 cities where we operate. This, coupled with various initiatives of the government to support the sector, makes us believe that we can grow comfortably at around 30% in the years to come. At Aptus, we believe in strong growth without losing focus on the quality of loan book, good financial metrics, and good financial metrics. Very happy to record that Aptus had a very good fourth quarter and full year FY24. Sharp business focus, good distribution network, deep penetration in served markets, customer centricity along with appropriate tech support have enabled the company to achieve good business results. The company's performance for this period demonstrates a sustained trajectory of stability, growth, and diversified income stream. Our net worth, as you know, stands at over 3,700 crores, indicating robust capital adequacy. This, coupled with good support from National Housing Bank, other banks, and DFIs on the borrowing side, and with strong on-ground demand for both home loans and small business loans, gives us confidence to pursue strong growth, scalability in the coming years with sustained profitability. I would now hand over the line to Mr. P. Balaji, MD, to discuss business focus, operating, and financial parameters.
Good afternoon, Fred. As we have been explaining in the earlier calls, we will continue to focus on key strategies, namely growing disbursements and loan book, both in housing loan and small business loans, considering the large headroom available in the low and middle income segment in Tier 3 and Tier 4 cities. Increasing penetration in existing geographies by opening new branches and expanding operations contiguously in the states of Odisha and Maharashtra. Strengthen analytics and digital adoption. About 18% of our business in Q4 FY24 has come from customer referral app, construction ecosystem app, and social media channels. Our focus shall be to increase the leads through these channels in addition to the physical branch network. Continue to focus on productivity, collection efficiency, OPEX, and cost of funds. Major performance highlights for the year are as follows. AUM grew by 29% year-on-year to 8,722 crores. Disbursements increased by 31% year-on-year to 3,127 crores. NIM was at 13.45%. OPEX to assets were at 2.7%. NPA was at 1.07%, down from 1.15% in March 23. PAT was at 612 crores, which is a growth of 22% year-on-year. ROA and ROE was at 8% and 17.25% respectively. Total live customers were at 1,33,000 customers. This has grown by 25% as compared to the last year. During FY24, 31 branches were opened, including our first branch in Maharashtra. Now coming to the asset quality, collection efficiencies improved during the quarter to 100.15%, resulting in 30 plus DPD improving to 5.41% from 6.04% in December 23. This will be focused and improved further in the ensuing quarters. Net NPA was at 0.8%. Provision coverage maintained consistently at 1.06% as of 31st March. We are carrying a total provision of 92 crores, and this, when computed as a percentage of NPA, works out to a coverage of almost 99%. Funding, well-diversified borrowings, of the total borrowings, 63% were from banks, 24% were from NHB, 13% from NCBs issued to IFC, mutual funds and securitization. We had sufficient on-balance sheet liquidity of 1,002 crores, including undrawn sanctions of 620 crores from banks. As you know, we have not done any direct assignment of loans and front-ending of income on account of this. Now, with these remarks, I open the floor for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, hi, good evening. Congratulations on very strong results. So my first question is, can you share your thoughts on sustainability of this disbursement momentum, while also throwing light on whether the issues faced in the state of Tamil Nadu has got resolved?
See, first of all, let me take this Tamil Nadu. I think this must be the question of all the persons. See, what has happened in Tamil Nadu in the last quarter is there has been a disbursement growth of almost 9% quarter on quarter, which means we have almost come back to normalcy in Tamil Nadu in terms of disbursement. During the quarter, there were good recoveries. Basically the NPA recoveries were much more. Because of that, the loan book growth was slightly subdued. But in this quarter, FY25, the first quarter, things will be back to normalcy in Tamil Nadu, and we are expecting a good growth there. And as regards the sustainability of growth, I think it is, we have been guiding the market on 30% year on year. I think this is doable considering the expansion plans of new branches, plus the branches which were opened last year will contribute for the full year. Over and above that, the productivity increase of the sales officers, and also the increase in average ticket size and the number of files logged in per sales officer per month will also contribute to the sustainability of the growth. So we are confident of pursuing this 30% growth year on year.
Got it. So would it be safe to assume that Tamil Nadu portfolio in FY25 can grow much better than last year? So last year it was 10% in FY24. Can we expect 20-25% growth in the current year in Tamil Nadu portfolio?
Definitely, we can do that.
Okay. And just last on portfolio spread. So portfolio spreads have improved by 5 basis points quarter on quarter after having declined in the preceding 5 quarters. What is the outlook on the spreads, based on your view on yield as well as cost of funds?
Going forward, I think the spreads are likely to be continued at these levels, considering the fact that the cost of funds might not go up, and also additional funds will be raised at the rate at which we are borrowing now. And we don't have any plans to increase the rates to our customers further. So considering the fact that the cost of borrowings are going to be the same, the spreads are likely to be same. But if the interest rates come down, I think Aptus is in a better position so that the yields can be better because of the fixed rate loan book.
Got it, sir. Thank you so much. And that's it.
Yeah, thank you.
Thank you, sir. We have our next question from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah, Kunal.
Hi. So firstly, maybe with respect to the branch addition, last time also we indicated we would be adding on to few branches, but I think the number is almost steady at 262. So what would have led? I think last time presentation says we would have already opened it in 4Q. And despite that, when we look at OPEX, both in terms of the employee cost as well as the overhead cost, that has been higher. So what has led to the higher OPEX? Yeah.
Last time we had guided for more branches in Maharashtra in Q4, but that has slightly got delayed. In April, we have already opened 3-4 branches. Okay. So that was the only indication we gave, and every year the plan is to open between 31 to 35 branches, and that will be pursued and continued year on year. Now, just to add to it, as of 31st March, we had 3 branches in Odisha and Maharashtra. Yes, 3. And then we are planning to have about 10 branches in the first quarter. So 3 will go up to 10 in Odisha and Maharashtra. In fact, Maharashtra will add up to 5 branches. Of the 10, 5 will get added in Maharashtra. And as you must have noticed, even last year, that is FY24, we have had about 31 new branches. And current year also, we are really planning to add about 35 to 40 branches. Actually, 40 branches will be budgeted for addition in the current year. Particularly including not only the new markets like Maharashtra and Odisha, but even the few of the existing states like Karnataka and Telangana. We are planning to further strengthen the branch sector. Now, as far as OPEX is concerned, we as a company, we've been very, very conscious more on productivity rather than increasing the cost. In fact, the current year also we had a very good while our actually field at the field level. Not only the direct sales officers, but even the other support functions, namely credit, legal, technical, collections, we were very consciously building up a good productivity level. So the numbers have not really gone up much. Even in HO, we are really operating about 190 to 193 staff, and we have not added much there. Other than strengthening the people at the senior level, at the second level in almost all the functions, including IT, credit, collections, kind of thing. But then basically on the back office side, we were really strengthen our IT system to handle the volumes rather than adding people. Yeah.
Sure. So, and this employee cost rise, this would be more to do with the incentives during the quarter?
Because of the higher volume, the volume-related incentives that got paid to the employees has increased. Yeah.
Okay. So, volume-related incentives to the employees is getting reflected.
Yeah.
Yeah, and if we look at in terms of the overall business origination and the credit team, in fact, it's sequentially down. So is it again to do with more in terms of moving from the field level to the head office level? Is that leading to sequential decline in the staff, or this is the attrition which is happening, which is more than the recruitments during the quarter?
No, see, the reduction has happened only in the business origination because of some people at the low level, which is at the sales officer level, leaving. But at the credit and all, it has remained constant.
Okay.
Yeah.
No, there was marginal decline, but so that's largely to do with attrition and so that's largely to do with the attrition and not getting replaced with the newer staff.
Yeah, maybe. Yeah.
Okay.
So not only attrition, it's not, see, we're also very conscious at every stage, periodically, to optimize the number of staff, at the branches, into whether it is sales or other support staff. Particularly the large numbers will be there, as you know, in the field staff and in the collection level. And particularly field staff also, we would want to encourage them to earn more through incentives
rather than adding more people. So constantly there is a rigorous follow-up system in terms of the optimizing the staff numbers all the time on an ongoing basis.
Okay. And one last question was NHB drawdown there during the quarter. So this 610 odd crores that includes NHB as well. Last time we used to give it separately. So this 300 crores of NHB which was there last time has been
drawn that in the last quarter. This is the sanction from the bank basically, which is not.
Okay. This is not NHB. Okay. Yeah. Thank you. Thanks for the clarification.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Mr. Anand Doshi from Family Office. Please go ahead.
Yeah, good afternoon. Thank you for taking my question and congratulations on a very steady state of results. So very quickly, sorry, my question may sound partially repetitive. The line was not very clear at my end. In terms of spatial distribution, in terms of branches, I think you added 31 for the year, and that is actually in line with your guidance of around 30 branches. So that's very heartening to hear. The only question I had a little bit within that is that you have said it would be about 3 to 4 branches in Orissa and 2 to 3 branches in Maharashtra. This was at the start of the year, so roughly around 6 to 7 branches. However, the addition has just been 1 branch. I think you mentioned that you are adding more branches in these 2 new states in this year, but I couldn't hear it well. So could you be kind enough to repeat that, please?
Yeah, what we told was there is currently in Odisha and Maharashtra we have 3 branches. This will be taken up to 10, which means 5 more will come in or 4 more will come in Maharashtra. The balance will come in Odisha in the first quarter itself. That's what we told.
Okay, sir. And sir, any if you can outline any particular reasons, any specific reasons, I mean to say, as to why this expansion has not happened in FY24. Obviously, business is dynamic, but I just want to get a sense from you if there is any specific reason why we have gone slow for Orissa and Maharashtra for FY24 as well.
It is not that we went slow on Orissa and Maharashtra. It's just a lag of 1 month. I mean, as of now, we have already identified 3-4 locations in Maharashtra. Okay, so it's just a lag of 1 month. It's not the question of delay. And also, I mean, if you look at it, the year-end pressures of other areas because of the disbursements and recovery. So that is the reason. Actually, it is not that we are delaying things or things are happening that way.
Sure, sir. And as I said, the branch traction growth has really picked up. So heartiest congratulations for the execution on that part. So secondly, I had a small housekeeping question which earlier had raised offline. In your presentation on slide 9 with the title Diversified Income Stream with Niche Customer Focus, I think what we are doing is we are mentioning the AUM, which is of course of the book, but the breakup is of the revenue or the income stream part of the AUM. Am I correct?
No, I didn't get your question properly.
Yeah. No, sir. What I'm saying is, if we are looking at a consolidated AUM of 8722 crores,
correct,
home loans is constituting 60%, but this is not the home loans AUM. It is the income stream from the home loans AUM.
No, we have 60% is the AUM actually. It's not the income stream. What we are trying to tell by way of the title in that slide is, Aptus is having 2 or 3 products because of the NBFC. We have got 1 more product, which is the small business loan, and that is where the income of the company is having a diversified stream. We have got correct 2 or 3 sources in which we are earning the income, and the 60% is the AUM. So of the 8,722 crores, 60% is the housing loan book.
Sir, but that amount is not matching.
Just to explain, in slide number 9, HFC what has been given as AUM as 6,759. That is not the housing loan alone. In the parent company, main company, the AUM is 6759 crores. That includes home loans, quasi-home loans, insurance, top-up loans. Okay, and subsidiary company, 100% subsidiary, we got the AUM of 1,963, adding up to 8,722. So the whatever numbers have been given here is the AUM, or not the revenue. A. B is that if we take 6759, the parent company, divided by the total loan book of 87, it will work out to much more than 60. That's because it is not just home loan alone. It also includes the a part of quasi-home loans, etc.
Correct. No, sir, correct.
Consolidation basis, you see, consolidation which has been very clear. 8722 is the total AUM. Of that, home loan is 60%, and then there will be a breakup given for the other products.
No, sir, that is fine. So I have a follow-up question. See, if you look at the first pie chart, it is HFC 6759, of which home loans is 69.
Anand, what I suggest is this is a data keeping question. I think I'll give you a call and explain things slightly differently. Okay?
Sure, sir. Fair enough.
Yeah.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Raghav Garg from Ambit Capital. Please go ahead.
Hi, thanks for the opportunity. I just have one question. So when I look at the on-balance sheet liquidity, specifically cash and investments as percentage of borrowing, for your peers it seems to be around 15-16%, and for you it's been coming down quite sharply. It's now around 7-8%. What would be your comfort level in terms of where would you like to see this ratio? Because I believe that since it has come down, that has given some bit of support to your NIMs. Had it not been the case, the margin compression would have been higher. So ideally, where would you like to see this ratio?
See, as a company, we would like to be prudent in how much cash balance we keep, because what happens, you all know, if you have higher cash balances, there is always a negative carry. So normally we would like to have at least 1 to 1.5 months disbursement as cash and cash equivalents in the balance sheet, and the balance will be in the form of undrawn sanctions, which is a committed sanction. We have executed the documents and kept it ready. Okay. So that is how we would like to maintain, because we don't believe in keeping 2,000, 3,000 crores as balance sheet liquidity and then having a negative drag on that, and also maintaining a housing loan asset for that. So that is the reason why this is our general policy, that 1 to 1.5 months disbursements will be carried as cash and cash equivalent in the balance sheet, and the balance will be in the form of executed sanctions.
Actually, in addition to that, we also, in a way, while we are wanting to be very prudent to carry a required liquidity to take care of the disbursements, we also want to keep in mind the overall interest rate environment. At this point in time, carrying at a higher cost, borrowing at a higher cost, may not be the prudent thing. Particularly if there could be an interest reduction, if not in the next 3 months, at least in the next 6 months or next 9 months. Should there be an interest rate reduction, we should not end up borrowing unnecessarily at a very high cost at this point in time.
Sure. So is it fair to assume that this number is going to remain at this current level when I look at it as percentage of the assets or as percentage of the total borrowing?
Yeah, broadly, actually, we don't believe in the philosophy. In fact, some of the companies, even our same industry segment, carry, you're right, they carry huge, liquidity in their balance sheet, which we don't want to pursue. Not only in terms of negative carrying costs and the interest environment, but also as per the revised NHB guidelines, RBI guidelines, you have to carry 60% home loan in that as well. Because 60%, criteria is applicable at the total balance sheet size, including the, cash that you carry. So we also kept that in mind.
Sure. That's all from my side. Another question, outside of South India, in Odisha and Maharashtra, what would be the total number of employees that you have across, I think, 3 branches?
20. 25 people. Yeah.
25 people. Thanks. That's all from my side. Thank you.
Thank you, sir. We have our next question from the line of Renish from ICICI. Please go ahead.
Yeah, hi, sir, and congrats on a good set of numbers. Sir, just one question from my side on the geographical diversification. So, what could be the next 2 to 3 states wherein we will be growing our book, in an accelerated manner, so that if something what had happened in Q2, Q3 in Tamil Nadu, that should not impact our AUM growth going ahead.
Actually, just to add, I saw in one of the newspapers today of the lending, the credit, credit exposure to different sectors. Agri sector carried percentage. The agri and related, in that the highest lending was done to southern states, and you must have seen the data, followed by north, and the least percentage was done for the northeastern and eastern. But you'll be surprised of the total lending by the banking system, over 50% lending was done in the southern states. Right. And northern states, I think around 18-20%. West has some percentage, and least percentage is east. So, in other words, we do believe that, particularly in where we operate, Tier 3, Tier 4 cities, constructed houses, there is a good demand that's available in the southern part of India with good credit culture, income levels, and serviceability and things like that. So we still think that we are not fully, over. We are really geographically we covered every part of southern states. Possibly we would have covered in Tamil Nadu and Andhra, but we still see a gap to be covered in Telangana and Karnataka. So that's where we are going to be adding, as Balaji said, of the 40 branches. A significant part of the branches will get added in Telangana and Karnataka. And we're also planning to add more branches in the 2 identified states, namely Maharashtra and Orissa. So not only that, even of the total branches of 262, they are in different stages of loan book. So in other words, the branches that are added in the last 1 year, the average loan book is only 5 crores. So there is a scope to move it up. Again, branches that are there, 1 to 3 years, there is, 17 crores to move up further. So these will be our priorities. Adding more states just for the heck of it is not our priority.
Okay. So basically, incremental growth will be largely driven from, let's say, Karnataka and Telangana, at least in near term.
Yeah. Progressively, we will keep expanding on a continuous basis, as we've been saying right in the beginning. Yeah.
Okay. Thank you, and best of luck, sir.
Having said that, the growth in Tamil Nadu and Andhra Pradesh will also be there. It's not that it is not going to be there.
Yeah. No, but on relative basis, I think these 2 states will grow at a faster clip than
more. Yeah.
Yeah. Okay. Thank you, sir.
Thank you, sir. We have our next question from the line of Nidesh from Investec. Please go ahead.
Thanks for the opportunity, sir. So firstly, on the small business loans, now that the share of housing loans have increased to 60%, how do we plan to improve the growth in the small business loans again?
See, broadly, this ratios will be maintained with 60% housing loan on a consolidated book will be maintaining it. And the balance, it will be 20% or 21% will be in the small business loan. And 15 to 17% will be in the quasi-home loans. And top-up and insurance will almost be the same because that's the resultant of good paying customers, and also insurance is a thing for the credit shield cover. So, credit shield cover. So this is basically so broadly this ratios will be maintained because we also need to take care of the compliance. So this will be the ratios with which it will be, the loan book will be progressed.
Sure. So if you look at last 2-3 years, the small business loans growth has been lower than the balance sheet growth. So are we taking any steps to further to improve that growth? That was so we were I think in the past we were thinking of building a dedicated team for small business loans, etc. So where are we on that path?
No, we are in the process of identifying the dedicated team. For that, we are in the process of identifying the head of that vertical. Soon we'll be recruiting and then taking it forward.
Sure. Secondly, sir, in the Tamil Nadu state, if you can share the absolute disbursement for Q4, and what was the YOY growth in disbursement in Q4? Q on Q, you mentioned it was around 10%. But what was the YOY growth trend in Tamil Nadu in disbursement?
I told you earlier, the disbursement growth quarter on quarter, the Q4 disbursement is almost, the growth is 9% in Tamil Nadu. See, the loan book growth was subdued because of the NPA recoveries that has happened, which is good for the state. And the things have already come back to normality in terms of disbursements in Tamil Nadu. In this quarter, you can see a good traction on the loan book growth as well.
So, if you can also share the absolute number of disbursement for Q4 in PN.
I'll call you later. Yeah, take offline. Yeah.
Sure. And so, what was the BT out rate for FY24?
BT out, see, the BT out rate is around 2.5%.
And what will be the dividend payout policy going forward?
So, as a policy, as a company, we will. It's not the dividend declared is not really one time, and there will be a dividend payout ratio. The board has considered that, and we have we had discussed and put out a broad policy in terms of this company will continue to pay their dividend on a continuous basis, and at a payout at a reasonable and sustainable payout ratio, and that's what has resulted in, even now we are declaring a dividend of 2 rupees 50 paise, and earlier we declared 2 rupees, totally about 4 rupees 50 paise per share of 2 rupees face value. We have declared it. So, in other words, our dividend policy will take into consideration our PAT payout ratio, and it will be our endeavor to continuously maintain, improve if not the payout ratio, the quantum of the dividend going forward.
Sure, sir. And lastly, in terms of disbursement mix, we have seen very strong growth in the customer referral channel. So, what exactly have we done to drive that growth?
Nilesh, I'll take it offline because I don't want to discuss with the public forum, because we have got some certain things which we have done. Yeah.
Okay, sir. Okay. Thank you, sir. That's it from my side. Thank you.
Thank you, sir. We have our next question from the line of Sanket Chheda from DAM Capital. Please go ahead.
Yeah, hi. Good afternoon. Congrats on a good set of numbers, sir. Just wanted to check in this quarter, as far as the provisioning and other income goes, there has been some restatements for prior periods, that's Q3 and for 9 months FY24. What has been the change in terms of accounting?
So basically what has happened, we have netted off the recovery with the provision. That was till 9 months. Now we have grossed it up, and the provision has been stated as the provision, and then the bad debt recovery has been added to the other income.
Okay, so the credit cost has gone high, provisions have gone high, and the other income has also gone high.
There was also an equal amount that has been recovered out of bad debt.
Okay. Okay.
Yes.
Sure, sir.
Our total write-off at ECL provision all put together only 0.29%. And in fact, there is a substantial reduction even in the previous year number, if you can see, from 0.57. So in other words, our provision write-off, whatever given here, what is actually it's not really gone up. It has actually come down. This is actually despite the fact we really carry reasonable amount of management overlay. And as Balaji said, the overall provision is we are now carrying at about 1.06% of the total assets, which compares much higher, better than a comparable company.
Yeah, the provision YOY would have come down. I'm saying the amounts which were reported earlier versus that the numbers have gone up in terms of provisions.
Yeah, but there is an equal amount of recovery that got added to the other income. That's what I want to say. Yeah.
Okay. And just on the question that the earlier participant alluded, the slide which we give on, say, NBFC and HFC AUM, an NBFC AUM would have just small business loans and non-HL. Is that correct?
Yeah.
So when we add up the two separate pie charts to arrive at consolidated, then the share for HL comes to about 53-54. So just there was some problem in reconciliation of that. If you are okay, we can.
Specific numbers like I'll see. Earlier I think Anand was there, and I'll also take you on a call and then explain how this has been arrived at.
Sure, sir.
Yeah.
Sure, sir. Yeah, those were the two questions from me. Thanks.
Yeah.
Thank you, sir. We have our next question from the line of Arul Sevlan from Independent Advisors. Please go ahead.
Good evening. Am I audible?
Yeah.
First of all, congratulations on a good set of numbers this quarter. I just had a couple of questions. The first one is more on a qualitative level. How has been your credit underwriting experience so far in the non-southern states, Odisha and Maharashtra? And I understand that it's probably very new and it's too early to tell, but still, I was just wondering if you could shed some light on how the experience has been so far.
So the experience has been good. See, we have got, it's a question of, we have got around 60-70 profiles of the customers whom we normally fund. And we have got around 60-70 profiles of the customers whom we normally fund. And the same kind of profiles are being funded in the new states as well, whether it is Maharashtra or Odisha. So with the result, we are not finding any this thing, but the experience has been good. And the NPAs are not there at all, and I think 96% is this one, 1 OD. So things are good, and we have been experiencing good amount of good experience in the credit in these two states.
Okay, that's great to hear. The second question that I had is that with respect to these insurance loans, I was reading a media report which talked about the regulator looking into these bundling of insurance products along with loans. So I just wanted to ask you, so when a customer comes and gets a loan from Aptus, is it mandatory for the customer to get the insurance loans, or is it optional?
It is not mandatory. We give the option to the customer to take an insurance cover as a credit shield cover, because if something happens to them, the loan gets covered, and it is an option given to them. It's not being mandatory. But what we have done is we have got a good negotiated a good premium for these customers with an insurance company. So if they opt for that insurance, they get that benefit. And it's a one-time premium paid for the entire tenor of the loan. So those are the benefits which we explain to the customers, and if the customers are interested, they take it.
Okay. Could you give me a rough estimate as to what proportion of your customers have?
I would request you to rejoin the queue. There are several participants waiting for their turn.
Okay. All right. Thank you.
Thank you. We have our next question from the line of Bhavya Sanghvi from Fortress Group. Please go ahead.
Hello, sir. Just a bookkeeping question. Could you give us the 1+ CPD for the quarter?
It is around 7.5%.
Okay, thank you.
Thank you, sir. We have our next question from the line of Nischint Chawate from Kotak Institutional Equities. Please go ahead.
Hi, am I audible?
Yeah, Nischint.
Right. We have added around 100 odd employees, in the last 1 year in the collection team. So I was wondering whether we should read anything in this trend.
No. You go. Actually, see, it is not the question of, we wanted to strengthen the collections department as such. So that's why we have brought in this middle management in the collections as well. And then we have added this 100 employees in the collections, basically to take care of we have been driving this digital collections, which needs to be taken care of by more employees. And if you look at our cash collections, it is just 2% of the total collections. So those are the requirements, and that's why we have recruited. It's not that there have been any problems in the collection.
Actually, our loan book and disbursements have gone over around 30%. And the 100 over, about 420 or so. But as Bala said, some of these numbers is not only for this year. Actually, these numbers are really for the current year, FY25 also.
Yeah, actually, that's what I was asking, whether it's a catch-up or whether it is something which is, sort of more on an ongoing basis. So I think what he seems to be suggesting is that this is sort of more of an anticipation.
We have done this. Yeah.
Okay. Just one final data keeping question, if you could share the yield on loans, across segments for home loans, LAP, top business loans, etc.
See, if you look at the housing loans, the yields are around 15.5%. The quasi-home loans is around 17.5%, and the small business loan is around 21%.
Got it. Thank you very much, and all the best.
Yeah, thanks.
Thank you, sir. We have our next question from the line of Sonal Gandhi from Centrum Broking Limited. Please go ahead.
Yeah, sure. Am I audible?
Yes, Sonal.
Hello. Yeah. So just one question I had. Sure. So I just had one question. This is, when you are entering new states, so what kind of team do you build up? Is it like, your existing employees are transferred to the new states, or how do you go up building up the team over there?
When we get into the new state, what we do is, as we said, we are growing on a contiguous basis. That means the first branch that will be opened in a new state will be near to the operating branch in the already existing states. For example, in Odisha, we have opened our first branch in a place called Brahmapur, which is 50-60 kilometers from a place called Srikakulam in Vizag. So what will happen is the recruitment for these branches will be from the local place, which is Brahmapur, and the culture of the company will be driven from the already existing branch in Srikakulam. So that's how the whole thing works, and if we are able to be successful in training those people, then more branches will be opened in the new state based on this. So the recruitment will be from the local place. Experienced in the industry. With good experience in the industry.
And sir, understood. And how many employees would a new branch have, and across what functions, how many employees would you have?
The new branch, there are around 3 branches in Odisha and Maharashtra. All put together, there are around 25 people.
Sir, I'm talking about a single branch, a new branch which you are opening. So, say in, sales and operations, how many employees would you have over there, and how would you add it over a period of time?
We'll have around 8 people, yeah.
Okay. Thank you.
Thank you. We have our next question from the line of Mr. Abhishek, shareholder. Please go ahead.
Hello, is it audible?
Yes, sir, you are audible. Please go ahead.
Yeah. So congratulations on a good set of numbers. So my question is regarding the housing and small business loan. How do we see scaling these up versus the competition what we are facing? As I understand that one of our closest competitors is also getting into the housing space, and we know that he has already been in the small business space. So how do we see competing with them in the south as well as north?
First of all, if you look at the competition, I would like to break it into 2. One, first of all, if you look at the competition, I would like to break it into 2. One is on the housing loan, the other one is on the small business loan. The housing loan, basically, wherever we are operating, there are quite a few companies who are operating, but the yields where we are charging is almost on the same lines as other peers. So even if the competition comes, we'll be able to manage it. But in the case of small business loans, we have a competitive rate where we are charging less than our competitors. So even if the competition comes, then we'll be able to handle them there.
Okay. And second question is regarding the debenture issue, which we have sought for approval from the shareholders to the tune of 2,500 crores. So at what rate these would be, and how do we plan to use them?
Yeah, actually, these debentures will be. I mean, we at least at this point in time, we don't keep it. We're not keeping anything from retail. It is to be raised from the institutional investors, including banks, insurance companies, and others. And as far as the rate is concerned, I don't think we'll be able to indicate to you at this point in time any specific rate, given the moving market situation. So the rate we won't be able to give a specific number at this point in time, please.
Okay, I understand that, sir. But is it going to be something which is like, beyond what we are paying right now? Is it something you can disclose?
No, it will be, it will be market, given our performance, given our brand name, given our credit rating and financials, we are able to get some of the best rates. And we hope to continue to leverage that. And definitely we won't pay one paisa more than what we deserve to pay.
Okay. And just a last question, sir, if I can, is on the fixed rate loan book. We understand that, as something which works as an advantage for us is that most of our asset book is towards fixed rate. And in the environment which we are today, and if interest rates were to drop, what is the risk we hold of, people trying to refinance it or going to another competitor? Because they'll have to pay fixed rate as on our book.
Correct. See, till now, our BT out rate is only 2.59%. Okay. And we have seen both the cycles, interest rate reducing cycle and also interest rate increase cycle. We have not seen this 2.59% changing drastically over the last 15 years. So we also feel that this will not change, and this will continue.
Okay, but any measures we are taking towards that? Because if someone has to consider it, for example, he's taken a loan of 10 lakhs, and if interest rates drop by 0.5% or 1%, so being on Aptus book, he'll be paying 0.5% extra.
On a case-to-case basis, and then see what needs to be done at that point in time.
Okay. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Mona Khetan from Dolat Capital. Please go ahead.
Yeah, hi sir. Just a few clarifications. So, firstly, if you could share the breakup of AUM based on ticket size, that is sub 5 lakhs, between 5 to 25, and above 25 lakhs.
If you look at the AUM more than 20 to 25 lakhs, we don't have any loan more than 25 lakhs. And 20 to 25% will be 2 to 3% of our book. And most of the loan, almost 70 to 80%, will be between 5 and 15 lakhs. And the balance will be between 15 and 20 lakhs.
Got it. Secondly, on the if you could share the incremental cost of funds during the quarter, both for the NBFC and the HFC.
See, for the housing finance, we have been raising funds between 8.5 to 8.6%, and in the NBFC between 9 and 9.25%.
Okay. And are you seeing rates, the cost of funds peaking, or could it continue to rise for a couple of quarters?
Looks like it is peaking because the recent sanctions which we have received in April are also on the same line. So looks like it is peaking, and I don't think that's why I said the spreads can be maintained.
Mona, but we are also putting our pressure, and for example, State Bank gave a sanction that was 5 months back.
Yeah.
And we refused to take the interest rate. Finally, they came down. And we have done about how much? Over 100 crores?
300 crores.
300 crores from State Bank in our rate.
Not with our rate. Yeah.
Got it. So, while NIMs may continue to moderate because leverage will continue to rise, is it fair to say that the risk of spread pressures are very low in your case?
Risk of what?
Spreads coming down from here?
Yes, it is low. Yes.
Got it, sir. Thank you so much.
Yeah.
Thank you. We have our next question from the line of Arul Silvan from Independent Advisors. Please go ahead.
Good evening, sir. I just follow up from my earlier question. I was talking about the life insurance aspect of our lending. I wanted to know if you could give a rough proportion of what proportion of our customers have life insurance versus the ones which don't.
We can't get into specific details,
Okay.
We cannot get into what customer, what percentage, what amount, But what we do is totally compliant, either from IRD point of view or from the, our regulatory point of view.
Right. Because I was just trying to understand if at all there is some sort of an impact, if some sort of a regulatory ban in the future. I was trying to understand.
We've been going through the process last 5, 6 years. Yeah, one more. Yeah.
And also, take it from us, we are always on the right side of law. We don't want to be on the left side. So, very clear.
Okay, sir. One more question I wanted to ask, sir, is that I think you've given a guidance of about 30% of growth every year. Is there any sort of a breakup in terms of how much of this will come from the housing loans versus the small business loans?
We have the breakup. See, since the small business loans base is low, the growth can be at between 40% there because the base is low. Not that thing, but housing loans can be growing at 25 to 30% there again. So resulting in an overall growth of around 30 to 30%. Yeah.
Okay, sir. So do you have a specific target, sir, for the small business loan book for FY25?
No. See, that obviously we will be having it internally because that's how we will be driving the branches, right? So we have that target.
Okay. All right, sir. Thank you.
Thank you, sir. We have our next question from the line of Raj Patel, an individual investor. Please go ahead. Mr. Raj, are you there?
Hello.
Yes.
Hi. I just wanted to understand that why is the dividend payout ratio so high for our company? We have seen phenomenal growth of about 40% CAGR for the last 5 years. And do we see that we do not have enough growth opportunities? That's why we are giving almost 200 crores of dividend this year?
No, not really. On the opposite, we have indicated, a guidance of around 30% growth in business. And this growth, obviously, second thing is that, in fact, we are, because of the growth and our margin, it is absolutely, it's mostly, maybe absolutely also, that we will come for a capital raise again. Because there is, we will not really come for any capital raise at all, given our margins and profitability. Also, given the capital adequacy norms of this business, the risk weightage and capital adequacy norms of this business, we are unlikely to come for any capital raise. Now, coming to a point in terms of dividend payout ratio, we have considered that at the board. It is actually, if you really look at very closely, last year, our payout ratio is closer to about 40%. And this year, it will be made 35%. Actually, it is reduced, not increased, actually. And as the business grows and the profitability grows, we will keep this payout ratio in mind. But at the same time, while the payout ratio will be prudent, but it will not be at the cost of the business growth. And particularly when we see a very strong business growth coming forward, we are geared up for the, in fact, we are very strong at our capital adequacy ratio of 66%. So in other words, with that kind of strong capital issue, there is nothing like not supporting the growth of the business.
Yeah. Okay. Thank you.
Thank you, sir. We have our next question from the line of Nidesh from Investec. Please go ahead.
Just one data keeping question is on what is the incremental ticket size in housing and small business loan for us for Q4?
Incremental ticket size during the quarter has increased by 5% on the housing loan and 7% on the non-housing loan.
I couldn't hear the number. Can you please repeat?
Absolutely. Housing from 10 lakh or 7 lakh. From 8.6 lakh last quarter, this has become 9.2 this quarter in the housing loan. And on the non-housing loan, from 8 lakh, it has become 8.6 lakh.
And then lastly, do you see any impact because of the fair practices code for lenders on charging of interest on our company?
What is that? I didn't get you this.
There was a notification issued from the RBI on charging of interest by banks and BFCs. Fair practice code on charging of interest on 29th April.
No, this is really, particularly those businesses which are in the unsecured businesses like personal loan, consumer loan, where the RBI has increased the risk weightage. Some of the banks very consciously gone for a higher interest rate. They increase interest rate given the increase the risk weightage stipulated by RBI for lending to these sectors. But we are in a secured business and something like home loan. And we, other than the normal increase, we have not really come across any excessive increase interest requirement from bank. Also, given as I mentioned earlier, given our performance, credit rating, and profitability, we are able to raise the additional loans at a very reasonable and comparable rates.
Yes, just to add to what Mr. Anandan told, see, you are raising this query on this recent circular of RBI regarding the charging of interest rates. Where no problem. So, actually, what is happening, Nivesh, from 1st April onwards, all the disbursements for us is happening through RTGS, which is an account-to-account transfer to our customers. What does this mean? We will create the security interest before the disbursement happens. The proof of security interest gets reflected, and then the money gets transferred to the account. So we will not have problems on the basis of this RBI circular.
Okay, sir. Thank you. That's it from my side.
Thank you, sir. We have a last question from today from the line of Harshit Toshniwal from Premji. Please go ahead.
Hi, sir. Am I audible?
Yeah.
So just on one thing itself.
Not audible, Harshit.
Hi, sir. Is it better now?
Yes.
Sir, just on one thing that carrying forward from the dividend point itself, I wanted to get a sense that for us to grow at 30%, and given that our the overall balance sheet leverage will keep inching up, and what level are you comfortable with? Is 70% borrowings to advances is more a range where we would need to think for equity raise? And also, if you can help us correlate with the payout number that we paid roughly around 4.5 rupees dividend this year. So we are not following a typical payout percentage policy. So is it that we should just look at that 3-4 rupees dividend as an amount which becomes constant over a period of time? Because we'll need that money in next 3 to 4 years, beyond which, if we don't want to increase the leverage of the balance sheet.
As you know, our current leverage is low, and our intent is really take it up to 4 to 5 times. So that gives a long leeway. Considering the fact that even after dividends, we are retaining large internal cash generation. So in other words, our surplus out of net of dividend plus the low increase the leverage from current low level to a level of about 5 leverage, we anticipate to really maintain a reasonable amount of dividend payout. But obviously I won't be able to say, X number, Y number. But then our intent is really to maintain a reasonable payout going forward. And for that, we clearly, when we looked at our projected numbers, we will continue to pay a reasonable amount of, achieve a reasonable dividend payout ratio. At the same time, keep supporting the growth very well through additional gearing and through operating surplus.
Correct. So basically, sir, what you are trying to indicate is that roughly 80% borrowing to advances is where till that point we are comfortable in giving or maintaining the dividend payout, and objective is more to get that leverage of 5 times on the book.
Yeah, correct.
Okay. Got it, sir. Thank you.
Thank you, sir. That was the last question for today, ladies and gentlemen. I now hand the conference over to management for closing comments.
Thank you, Mana, for organizing this conference call. I would like to pay my sincere gratitude to all the analysts and investor friends who have taken time to listen to us today. Please feel free to contact us in case you have any further queries. Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.